Good morning. The bulls may be down, but whether they are out, only coming days will tell. The market may recover some lost ground after the sell-off in the past few sessions. The start today appears to be slightly shaky and sluggish. Global cues are indecisive, with European markets rising and Asian benchmarks trading in the red. US markets were shut on Thursday on account of Thanksgiving holiday. Traders and investors alike will remain jittery in the wake of the bribe for loan scam. Stocks of realty firms, select NBFCs and a few banks could remain under pressure, as would shares of companies named by the CBI. But the fact that the authorities are taking stern action should offer some comfort for a longer-term perspective. The time is right to pick up fundamentally sound stocks which may have got beaten down along with their peers. Globally, concerns prevail on the mounting fiscal woes of indebted Eurozone nations as well as on China's efforts to cool the economy. Geopolitical tension is also a near-term risk. The US markets will open today for half a day owing to Black Friday. Keep an eye on indicators and media reports on US retail sales over the Thanksgiving holiday. The Nifty failed to move beyond 5,970 and finally closed near 5,850 levels. Today we expect markets to remain volatile with levels of 5,925 acting as an intermediate resistance. Support is likely to kick in at around 5,750 to 5,730. There is a possibility of the Nifty falling below 5,700 and going as low as 5,500. On the way up, Nifty could face resistance at 5,870 and 5,950. Without doubt, 6,000 will be a critical level to watch. The best way to ride the current wave of uncertainty is to stay light and not be adventurous. The FIIs were net sellers of Rs 12.08 billion in the cash segment on Thursday, while mutual funds were net buyers of just Rs 1.98 billion, according to the NSE website. The FIIs were net sellers of Rs 12.46 billion in the F&O segment yesterday. Foreign funds were net buyers of Rs 17.75 billion in the cash segment on Wednesday, as per the SEBI website. Mutual funds were net sellers at Rs 4.53 billion in the cash segment on the same day. The IPO of MOIL opens today. The government on Tuesday fixed a price band of Rs 340 to Rs 375 a share for raising up to Rs 1,238 crores through initial sale of shares in Manganese Ore India Limited, which will become the fifth state-run company to see divestment this fiscal. The centre will dilute 10% stake in the country's largest manganese manufacturer, while Madhya Pradesh and Maharashtra governments will shed 5% each through the public offer that will open on the 26th of November and close on December 1. The issue would raise a total of Rs 1,238 crores at the upper end of the price band, including 5% discount to retail investors and MOIL employees. WPI inflation, especially food inflation, has moderated lately, but the untimely showers has indeed done some damage to the harvested kharif crops in many critical parts of the country, potentially pushing up food prices. The government threatens to cancel coal field allocation to NTPC and CIL. Tata Steel is looking at further acquisition to boost its capacity for meeting booming demand. L&T bags an order worth Rs 10.3 billion for construction-related works. Maruti Suzuki estimates that 20% of the cars will run on CNG by 2016. NTPC proposes to invite tenders for power generation equipments for all of its upcoming gas-based plants. SBI not to go for overseas bond issue soon. Maruti to hire 3,000 employees for expanding service network. Supreme Court rejects Reliance Infra's plea on toll bid disqualification. Ken seeks note from the government to transfer its main assets. Adani to develop non-LNG port at Hazira. Kingfisher has received preliminary approval from lenders to recast its debt. Jet Airways has entered into a pact with Alitalia to offer non-stop flights from Milano Malpensa to New Delhi. Food inflation hit 3-month low of 10.5% for the week ended the 13th of November. MNP to be available pan-India from Jan 20th, 2011. Moving on to the recommendations, the technical calls are: a buy on Gujarat Fluorochemicals. We recommend high-risk traders to buy the stock above levels of Rs 190 with a stop loss to be maintained at Rs 184 for a target price of Rs 204. And a buy on Bata India. We advise buying the stock in the range of Rs 352 to Rs 353 with a stop loss to be maintained at Rs 345 for a target price of Rs 369. The derivative strategies are: long Bombay Dyeing December future in the range of Rs 525 to Rs 527 for a target price of 540 and a stop loss is to be placed at Rs 518. And long United Phosphorus December future in the range of rupees 186 to rupees 188 for a target price of rupees 196 and a stop loss is to be placed at rupees 181. Thank you and have a great day ahead.